Good afternoon, traders. Good morning, our American brothers and sisters. Today we shall learn a new strategy that we call alignment strategy. So I will base it on the trader development program that I have received previously from my broker. So today we shall spend a little more time on just one strategy that is called alignment strategy. So in brief, I think I had mentioned to you earlier the whole concept of alignment, but more importantly, the fact that the markets are normally fractal by nature. Okay, so by fractal, I mean that if you look at a particular market, maybe on a daily time frame or even monthly time frame, then on the smaller time frames, you'll see the market duplicating itself in terms of geometry and structure. So it's almost like if you look at the bigger time frame, then it is repeated almost verbatim, almost okay, on the smaller time frame. So if this is a bigger time frame, let's say we are forming something like that, okay, you'll find that the smaller time frames will probably form something like that. Okay, so in a similar manner, but basically the same. Then even the smaller ones might even, do the same thing, and so on. So if you look, then this, even though it's in a smaller time frame, is similar to this in a bigger time frame, which is similar to this in a much bigger time frame. Okay. The only difference is they might not be like a photocopy exactly, but it's very similar, and that is what we call alignment. So, um, in fact, a quick reminder, something comes to my mind about some toys. I think in Russia, a long time ago, they used to have some toys that you buy the toy, and as you open it, I believe they were called mashruka or something like that. So this toy is like a little baby toy. Okay, so as you hold it and then decide to open it because it made so that you can open it. As you open it, you find that actually inside it, there every time you open, you find there's another smaller one inside it that is the same as the first one. And then as you open that one also, then you open there's another one, and then another one, another one, another one. So you might find that there are almost like 10 pieces, all looking the same inside each other. Okay. And I think sometimes in some of the new toys, like maybe Lego or something, you might have cups that are similar, okay, in design, but maybe even different colors or the same colors. So you find one cup has like 10 little cups inside them that are similar. So the markets are almost like that. They are fractal in nature, okay, meaning they kind of have a similar geometrical shape if you look at them. So why is that important? Well, it is important because you can use the larger time frames to actually trade on the smaller time frames. So like what we have here, if this is a monthly for the long-term traders, if this is a monthly, well, and this could be even a weekly, and you can go down to a daily time frame and actually trade that market. Okay. The significance is you might find that that point where maybe it reached, okay, the point where it reached the last high, that point will be the same in the monthly, it will be the same, okay, in the weekly or similar, okay, and the daily. Oops. Sorry, I think I lost my drawings. Anyway, you get the idea. So for us, the idea then is to be able to figure out how we can take advantage of those similarities or those patterns. So what you do, in fact, I was going to get into the charts. So I'm going to get the charts and give an example of the same. So I'm going to use CTrader platform. Okay, stop sharing that. Okay, so here, let me first change this to regular candles. Candlesticks. Okay, so in this example, we will look at a big time frame. So in this case, I think I have a 4 hour. It could have been daily, it could have been, but I picked 4 hour for this example. So you go to the 4 hours, yes, 4 hours. All right. And then if you look at what you have there, okay. Now this 4 hour time frame would be similar. Let me try and zoom out and see if we can make it smaller. Okay, that's 4 hour time frame. Okay, so the 4 hour time frame will be similar in terms of structure, in terms of the way it is right now, to the lower time frames and even the higher time frames. Okay, so if you look at maybe a 30 minutes time frame, you'll probably find something similar, but of significance will be the turning points. The turning points, which now brings me to now introducing the other part, which is you will take advantage of the turning points in the market, which sometimes are called pivot points. So if I was to draw the turning points here, this yellow one was one. I can look at that one. Okay, I was trying to use a different color, but I guess the default I had set was purple. Let me change this to another color. Okay, yellow. So yellow should be clear. I could still go on and put all these colors around and put one down here. Okay, there. So again, I have just, okay, let me put one more up here. There. So if you look at the chart, that's a 4 hour chart. And what I've done is I've put in all the turning points, not all of them, but the major turning points, which in other platforms they call them pivot points. So pivot points are actually support and resistance points. All right. So you can use support resistance points on a higher time frame, and then go to the smaller time frame for the trade. Now, if you're a scalper, you don't probably need anything else other than just go to a smaller time frame and start trading. But for people who are not scalpers and need some help in terms of using indicators, you can add a 60 moving simple moving average, which is here the blue one that I've added. How do you add it? You go to this F, okay, So it is an oscillator. Okay. It actually comes as a trend for this platform. And then you click on this simple moving average. When you click on it, it gives you that option. Okay. But what we want that period to be 60. Okay. So you type 60 there, and then you click OK. When you click OK, what will come out is this line over here, that one. So what is the significance of that line and our support and resistance? Well, for a larger time frame, it will help you figure out where to enter in some of those markets. Now, remember, the confluence in this case, like if you look at this line here, and if you look at the moving average, they meet at a significant point right here. So that would be a point to enter. And if you look somewhere around here, it's the same thing, same thing. If you go backwards, there'll be many places where your support resistance meets the moving average, and that signifies your entry. Now, not all entries are actually good, but some of them will actually be good. So like in this case here, on 25th of May, around there, if you scroll backwards or go into smaller time frame, you'll find that that point has been hit. Okay, so I'm going to go to the 1 hour time frame. Okay, on the hour time frame, 1 hour time frame, again, if you look at that point, okay, about the same spot, let's see, oh, that was 25th of May, yes. All right, so on a smaller time frame, it shows it as here. So this, remember, the support and resistance is normally a zone, not necessarily a line. So this point here becomes your significant point where you need to enter your trades. Okay. This point here. So about the same time, okay, 25th of May. Please note that this is a place where you probably will be entering a bullish trade. It's going to be going up. Okay, on the bigger time frame, it was the same thing. It was actually showing that it was touching, but on a smaller time frame, it shows that it is a zone, which is fine. It's fine. Now, if you go to even smaller time frame, small time frame like 5 minutes, the same thing will happen if you go to and you zoom out. Okay, and the time is, that's daily. Sorry. Oh, that's 5 minutes. Okay. The same thing, you scroll backwards. Okay. It was 25th of May and should be somewhere here. That's 29th, 28th. Okay, it should be at this point. Again, you'll find that it is the support and right here. Oops, that's 27th. Yeah, let me keep moving a little bit. 27th, 25th. There. So this is 25th of May. So 25th of May, actually, before it turns, it actually is right there. So if I zoom in, there are many places it touches, but I want to zoom in a little bit. Hmm. When I zoom in, it's not very clear, so I have to zoom out. Okay, but anyway, in general, it's somewhere around here, 25th of May. Okay, at the 25th of May, you'll find that the time, the confluence between the indicator and the support, in this case, will also give you a signal that this market is going up. So for long-term traders, the higher time frames are a little more accurate than the smaller time frames. The small time frames is a lot of noise. Uh, okay, so but as you can see, it did touch, or at least pretty close to it, right there. So this one, you would then enter your trade if it's a buy or if it's falling down like somewhere here. When there's a confluence between your support, this is the resistance, so your resistance and your simple moving average. When they meet over there, it's time to get ready for a sell. And then as you can see, it goes down a little bit, okay, then goes up, goes down again, okay, and that's because it's on a smaller time frame. But on a bigger time frame, you'd see that that is a significant point to actually enter your trades. So that is what we call alignment because of the fractal nature of currencies. So then the question that I get a lot is what should you use in terms of confluence? What is the best time frames to use, to actually do your aligning? Um, there are very many times you can use time frames, but in terms of what is suggested by many traders, you'll find that from the higher time frames, you can do like weekly, okay, for the, yeah, you can do weekly, and that will be good to check with daily and then hourly. So 1 hour, 1 day, 1 week. Now, are there others? Yes, of course. You can do monthly. So the month, you can use weekly, and you can also do daily. Okay. These ones here are the ones you use for trading. These first two, you just check for confluence that actually indeed they are lining up with what you want. Okay. Now, for those who like to trade intraday within the day, okay, you can use the 4 hour. Okay, you can use, and that is actually good to use the 1 hour and also the 5 minute. Okay, so you can use 5 minute or 15 minutes. Basically, if you're gonna trade 15 minutes, you can check that that shape or pattern has been formed in the 4 hours. Then it has been formed in the hourly, and it is being formed in the 15 minutes. So you take advantage of that. All right. Um, apart from that, well, remember this is forex trading. Hence, even though this is a system, a trading system that is good, it's almost very, very easy to learn and actually get some good profit. No system is perfect. We cannot say that it's 100% perfect. Hence, it's up to you to do what is called backtesting. Backtesting is exactly what I've been showing you right now here. You go back to the charts and put your moving average, okay? Put your support and resistance and try and find out if this met here, okay? Did it go up? If I had taken a trade doing a buy, would I have made profit? Okay? Every time the support and resistance meet, you ask yourself, if I entered the trade, would I take profit? If the answer most of the time is yes, then that is a good sign. It means that that system is good. It's good to use. Okay, and that's about it. So this is the alignment strategy, the summary. It is used when you want to use the higher time frame to actually give you an indication of the patterns that are being formed uh, in the short-term patterns and the smallest pattern. All right. So you jump into the charts with a smaller time frame, especially once you know the shapes that are being formed in the medium, short term and the longer time frame. Okay, I'll leave this open for questions and happy trading. Thank you.